All right, ladies and gentlemen, I hope you had a wonderful day. We have a lot to talk about because this stock market is freaking out. So, one, I want you to see how today looked. This was today. We gapped down 0.5%. The market sold off. We came very close to 4,100 at one point. You bounced up a little bit back up to open, only to end up where you traded most of the day, right? That was all day, right? Let's turn on after hours. The market is booming now, even though it's still negative. It's actually about to go positive right now here after hours, but Nvidia saved the stock market, or at least for one day. They had a killer earnings. They beat their current earnings, and based on the AI boom, they forecasted guidance that was 50% higher than any analyst was expecting. So you're probably going to see a reaction with even AI stocks tomorrow. People are asking, is this a one-time thing? Is this the new normal? But it's up 25%, I think even like 30% since the close. It's an absolutely crazy reaction, and it only adds to everything we're dealing with. So, Chad, we got a breakdown. I'm going to talk about what happened today. There was a lot of various points, but it was pretty much mudslinging and a lot of politics and everybody arguing. But there is one big thing, and this is why I'm saying the stock market's freaking out. We got to go to your pretty picture. This right here is the 1-month bond that is in blue, the 3-month bond that is in white, and then the purple or pink, that is your bonds that are due on June 1st. So this could be any bond. You got to think about it. There's also bonds that were purchased years ago, a couple months ago, that are supposed to pay out on this date. Those bonds right now, the current rate, it hit 7%. It came down a little bit lower. I think right now, as I'm making this video, it's like 6.8%. However, during the day, it went as high as 7.0 or like 7.1. Now, why this is such a big deal, this is that kink in the bond curve that we've talked about in the past, and this is people reacting to the debt ceiling. The bonds due on June 1st, that is when we are expected to run out of money. If we don't have the money, there is no agreement. If there was a default, those would be the bonds that would not get paid out, or at the very least would have a delay. That's why the yield is going up, because people are selling those. And ironically enough, though, all of the other yields are even climbing here too. You even saw that with the 10-year, and even today, all the safe havens and all that drop. But the point is, today, with all of the talking, even seeing what is reflected in the bond market, you had an increase on the freak out with the debt ceiling, at least directly on the bond curve. The credit default swaps did not go back to their highs. But, Chad, it was exciting. There is a lot. I need you to like the video, only if you want to show love. Man, hopefully we see you on stream too. YouTube.com/the stock market. If you weren't there live, if you're not going to be there for the data, maybe Friday morning PCE, you're going to want to be there. And then again, we got non-farms next week and all that. But, Chad, let's get into it. I already gave you the quick breakdown. Let's talk about the keys, though. Even though we are going to be dealing with the debt ceiling tomorrow, and there is a little bit more data, Nvidia just bought negotiators a day. I mean, even after hours, it's lifted the market up 0.5%, but I think there will be a lot of optimism at the very least in the chip makers. But what we got to find out is, how does this last? So I have a little bit of explanation on that we'll talk about, but beyond the earnings after hour, which gave us something real big to focus on, the whole theme of today was just true escalation in terms of the debt ceiling getting worse. We are now entering into Thursday. Remember, there is a holiday on Monday. The stock market will even be closed. There is no outline of an agreement. They are all both talking smack back and forth, and we have no agreement has been made. That is just the crazy part with all of it, and we know they're stuck on spending. They are going to demand 72 hours to do the voting, but like I just showed you with the bonds, their real reaction here is actually starting to show up. And again, maybe we'll be 1 week away and see what happens, but that's your first key. Coming into your second key now, we're going to talk a little bit about tomorrow and today, but for tomorrow, you have a lot of data, and after the Fed minutes that we got today, I would watch for a little bit more volatility. Essentially, the Fed minutes came out, and it did not show the clear pause signal everybody has been looking for. Again, ever since Powell, right when Powell spoke, everyone said, okay, boom, they changed the language. They still kept some of the old language, but everybody said it was going to be a pause. If you remember the Fed futures, this is probably going to look a little weird for you, but remember, right after the Fed meeting, this was 99%. We took a short and we shorted it. I think I shorted it to like 69%, and then we covered, made like $100 or $200. But the market was very certain that there was going to be a pause. That is what everybody thought on June. So the odds have came back now, and they even went a little bit lower today, even after the minutes. But the minutes pretty much showed the Fed members were split. It's not as if everybody on the Fed was like, boom, this is our pause. And pretty much the Fed is not as confident as the market was. I mean, it seems like everybody is split. They use words like some, many, several, and pretty much they said most, if not everybody on the Fed, they're worried about inflation not coming down. They are also worried about the impact that banks are going to have on credit. You've been hearing that a lot lately, and the Fed is doubling down on the uncertainty that was created since all of this happened. And then they said some officials can see rates not going higher if the economy plays out how they expect, which is poorly. It even said they are talking about a recession. The Fed is expecting a mild recession sometime later in this year, and then it gets better by 2024. But they say if that does play out, inflation does come down, they've already raised rates, the credit tightening does occur, that's where they're saying pause. But they said some officials, but it contradicted itself because it also says, not even contradict, but again, it's just showing you how split they are. But it also said some officials still see higher rates and that they want optionality at the next meeting, and they are pretty much going to be data dependent. So this was really big today, and my take from it is that all of the data is that much more important. I never believed the pause. Do I think it could still happen? Yes. And what we said from the first time ever, the pause will happen when they actually pause. If we make it to June and they do not move interest rates and they stop that big force that was going in that direction, then we know it's actually going to be real. I don't think we're going to have to search so deep to find out for it. So we need to see that at this next meeting. But what Powell has also showed us in the Fed, they will pivot right at the very last second. We learned that last year as well, too. So I think they're just going to wait for the data, and that's why now the PCE on Friday, the non-farms next week, and then the CPI after that the day before Powell, those are going to be the biggest drivers. And if those still show higher inflation and no real progress, depending on how people feel about the bank still, most likely they're going to have to make a big decision, and I think that data will push the Fed futures, and we'll know by then. But I think it's simple. It's back to the OG plan. I know it seems like the stories develop, but whatever these Fed futures are at by Powell, that's it. The day after CPI, I think Powell will just pivot right into that. And like they said in the minutes, I think they're going to preserve that optionality. So we'll see, but as far as the data tomorrow now, this is what's leading into what I'm expecting. You are getting data from pre-market, 8 a.m., an hour before Chicago Fed, even initial jobless claims. That could be big, as well as GDP annualized, even the core PCE quarter over quarter. All of that comes out an hour before the bell. Then 10 a.m., real estate data. And then 11 a.m., you get the Kansas City Fed manufacturing. But pretty much, I'm just going to watch till around 11 a.m. after all of the data releases. If Nvidia and this positive sentiment holds even from the AI stuff, and even if Asia overnight, if they take things good in Europe, because again, Europe had another bad day. We were talking about the luxury goods and all that. They had another surprise, inflation surprise in the United Kingdom. So we'll see if that plays out and how people feel with the Nvidia stuff. And after the data, given the minutes, if it does create more volatility, we'll be able to notice by then. And I think it's either two options. If by 11 a.m. tomorrow, after all of the data, I think we melt up if people are really feeling good. Otherwise, I think it's just going to go back to react a little to Nvidia, react to the data, and then we may just get put into another debt ceiling trance until the market gets a statement it wants to react to. So we will see what happens. But Let us get into the plays. So, I know, I don't know. Maybe you like the camera or not, but you've been getting plays. I've been giving you plays, things to look out for. And the first one is AMD. I sold it after the bell, too. I made just under like $400, which is surprising because I thought I top-ticked it. Even if you bought the top of NVIDIA, all-time highs of NVIDIA, up until the earnings at 330, you would still be up like $50 a share right now. I know, $57. It's amazing. But AMD was the cheaper sympathy. I mean, we had the earnings. We were covering it live when it came out. It was really good. I mean, there's no question about it. They beat by $500 million this quarter. They guided 50% higher. And this is just now the first evidence of AI showing profits, and pretty much NVIDIA has a unique position where they're offering like the data centers and servers for all these people who want to incorporate ChatGPT, this ChatGDP, whatever it may be, but they're the ones paying NVIDIA. NVIDIA is saying they said they're literally on the second half of this like second rally that they went through. If you did not see what happened with these names, it was CEO even saying, NVIDIA CEO said, we are at the first year of a 10-year cycle. So sounded very bullish. And like I said at the beginning of the video, people don't know, is this a one-time thing in terms of guiding up that much by 50%? Or is this going to be the new normal for some of these people getting ahead and holding that dominance in AI? So I think AMD had opportunity. I mean, I'm good with like 5%, like, you know what I'm saying? So I thought I bought AMD high. I took profits. We even have sympathies that we'll talk about that could benefit, but I'm going to be watching AMD. All of the AI stocks, I think, depending on how this maintains, like I'm saying, let's see how it plays out. Europe, China, see the morning sentiment, see that early data, see where we are by 11, and depending on how people feel, though, I mean, I think there will definitely be a pocket for the chip makers and AI stocks tomorrow. So at the very least, I'm going to be looking to monitor that. But that's the first play, AMD and NVIDIA, crazy move. Play number 2, I have this for the long term. I'm trying to trade this, and I'm looking for a minimum. But MPW, the real estate stock, it has a nice yield. And honestly, in the back of my mind, it is a long-term play. So depending on how long this takes for me to hit it, I mean, I think we can make it till the June. I think it's 2 weeks till ex-dividend, and that's like a 4% divvy or something like that. So that's the insurance. But they had good news today, and I'm looking for them simply to go back to the level of the bad news. Honestly, I know there's a lot of deep stuff with MPW. They got short reports. I mean, if you haven't seen this stock, it's a very interesting one. You should look into it. And again, I've even said, unless the management is completely fraudulent and lying, that's the only way I see it, like, really getting clapped, and a lot of things could come true. But here's the thing about it. On this day right here, May 12th, they dropped. It was like 10%. Then they continued to go lower for the next 3 days, back to their 52-week low. And this was on news that their troubled tenant, who was like 20 or 30% of their revenue, that they were looking for refinancing. And why this was bad news was because that company failed that refinancing before. And if they don't get refinancing, they cannot pay MPW. Well, it was announced today that they got the refinancing. And, well, then there you go. Problem averted. Stock was trading at 843-ish by earnings, and that's where it was before everything happened. And that's why I'm like, I could take a little flip at the worst case. Maybe we go for some dividend arbitrage if it does get uglier. But real estate stocks did do bad in general. But I'm looking to swing this play for a little bit on the trading side. The long term, that's a long-term discussion, But that's play number 2. And then finally, play number 3, I sold my AMD. I'm down with that because Amazon, we made a play on this at the beginning of the week. I grabbed like a $50 option on the weekly, so that was nice, but I figured all of the tech stocks started going up. NVIDIA, AMD, even Amazon, they got a little bit of cloud exposure, but also like data center, AWS, that could probably be very positive for them, but all of them are going up. I said, let's take AMD off the table. We'll see where things are at in the morning, and now my idea with this Amazon contract is I want to flip it in the morning and find a spot to double dip. So I know you haven't seen too many option trades lately, and you got to be careful. I mean, we made a couple. We closed out the Upstart 1,000%. That was either ended last week or beginning of this week. But what I'm trying to tell you is you've seen this a couple of times, depending on the morning, depending on how things are. I pretty much think these contracts, we've watched it all week. We should be in the money, I think, after hours or close to it. Let's see, where's Amazon? Yeah, like 15 cents away, but I wouldn't be surprised to watch this contract do a little bit of back and forth. I think we'll have an opportunity to either ghetto spread it, take profits in the morning, and then if it does like dip down and I see it come back at a lower price and could hold up, I'm going to reinvest the $50. So pretty much the idea is sell out at a premium in the morning on the option, and then if it comes back down, find a spot to double dip it with the same $50. So pretty much using the same $50 and maybe walk away with profit and see what kind of continuation we get, but we'll see how that plays out. But I think that one will be an interesting one and mix it up for a little bit, give y'all a little bit of options, but that's the main plays. That's pretty much everything. I don't think we did anything too crazy today. I mean, I bought the MPW, flipped the AMD after hours. I got like a micro ES, and then still holding the hedges. The bond play, the bond premiums are down $400 on the option one. So that's the side bet for the debt ceiling. And like I said, just watch that, because if I'm down, that means the fear is lower, even though we got the bond yields kind of tripping out. So everything's getting interesting. I think today you got real escalation. You heard a lot more of everything from the debt ceiling today. And like I said, we'll see how this optimism plays out tomorrow, how it feeds in, and we go from there and see what happens as we get some more data and slowly creep into Powell in a couple of weeks. So I hope you're ready, but that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, good words, wise words are worth more than gold and jewels. And when that reference is made, the reference that comes before it is that when a man haggles, he says something is worthless, and then after he buys it, he turns around and brags about what deal that he got. That's it. That's all. That's your end of the day. That's all I'm going to say. I'll let that marinate. You can marinate with that, Chad. You better drink your water. You better be hydrated. I'll see you in the morning. Get ready for all the data. And I hope you're ready for another 6 months. And even everything, Chad. But I love you. Have a great night. I'll see you in the morning. Thank you again, as always. And bye. Hearn.